The Federal Reserve leaving interest rates unchanged at 5.25% to 5.5%, and leaving in those three rate cuts, projecting a year-end funds rate of 4.6%. I'll get back to that in just a second. They see the economy expanding at a solid pace, same as they did in the last statement. Inflation has eased, but remains elevated, same as the last statement. If there's a theme developing here, it is. Not much change. Only one change, actually, about job gains remaining strong, no longer saying they've moderated, saying the risk between employment and inflation goals are moving into better balance. They also said they still do not expect it will be appropriate to cut the target rate until it has greater confidence inflation is moving towards 2%, which is to say they don't have that confidence yet, and so they're not projecting when those rates might be cut. On the projections, pretty interesting here. Big boost to the 2024 GDP outlook to 2.1% from 1.4%. A tick lower on unemployment, down to 4%. This is the 2024 year end. 2 ticks higher on core PCE to 2.6%. And yet, more growth, more inflation, lower unemployment. They left those 3 cuts in place of 4.6% for year end. They did skew a little bit more hawkish, and I'll get to that in a second. I will tell you they cut one rate cut away from next year. They went to 3.9 from to 2.39 from 3.6, and for 2026 to 3.1. And a tick higher, by the way, in the long run rate. They say they remain highly attentive to inflation risks and ready to adjust policy as needed. Guys, I don't have a chart for this, but let me just tell you. In the January projections, there were 5 officials below that median of 4.6%. Now there's only 1. So a lot of people who were more dovish came up, and they're more in line with the committee. But it is an interesting question right now. The Fed sees more inflation, higher growth, and yet they left those 3 rate cuts in place, at least for this year, taking 1 away from next year. Tyler?
This was a unanimous decision, I take it?
Yes, sir.
No dissents there. And as you say, it looks like there's a growing consensus among the members of the board around that 4.6% year-end number, right?
That's a good way to put it, Tyler. Almost everybody except for one person is on board on 4.6 or higher. I will tell you, though, that in terms of being above the median, there were 9 officials in December. Now there are 8 officials above the median. So it came down into, sorry, it's the other way around. 8 officials last time, 9 this time, who are above the median. So they did skew. Remember, we needed 2 to get above the median, 2 more, and there was only 1 more. But what happened is the bottom came up to the median. So everybody has this, as you suggest, Tyler, that consensus around that median of 4.6 or the 3 rate cuts this year.
All right, Steve.